Hey Bitcoiners, Lockie here from Edge 21, your go-to source for trending Bitcoin news, sharp analysis, and actionable insights. Welcome to this week's Bitcoin price analysis. Today we're breaking down what's driving Bitcoin's price, what led us here, and what to watch out for in the short term. If you're here to decode the buzz around Bitcoin's price movements, you're in the right place. Let's dive into the numbers, insights, and key levels that could shape the market ahead. Bitcoin recently slipped to $91,000 after touching a high of $106,000 in December. But why the drop? Here's the story. Long-term holders, or LTHs, sold off a massive 1 million Bitcoin this year. Yes, 1 million. One day alone saw 70,000 Bitcoin hit the market, in one of the largest sell-offs in 3 years. Yet Bitcoin didn't collapse under this pressure. Instead, the market showed resilience thanks to unprecedented institutional demand. For example, ETFs snapped up 525,000 Bitcoin in 2024, 10 times the annual mining supply. Retail investors, affectionately called shrimps, also boosted their holdings by 21.9%. That's over 323,000 wallets with less than 1 BTC. This growing confidence is what's keeping Bitcoin strong despite the profit taking. You can see this vividly in the Bitcoin ETF purchases graph, which shows institutional appetite surging to record highs. Bitcoin's price swings aren't just about trading. Macro factors play a big role too. The US dollar is stronger than ever. Oil prices are ticking up and bond yields are rising. These factors tighten global liquidity, and Bitcoin, as we know, is one of the most liquidity sensitive assets. Seasonality is also at play. End of year rebalancing by funds and traders led to $380 million in ETF outflows over 2 weeks in December. It's a typical pattern we see every year, but it doesn't change Bitcoin's strong fundamentals. Interestingly, there's a weak air pocket of support between 86,000 and 73,000, an area with fewer historical transactions. If Bitcoin falls below 86,000, this range could become crucial for investors looking to accumulate. The supply air pocket graph from Check on Chain perfectly illustrates this critical support gap, something every investor should keep on their radar. In the short term, Bitcoin faces a tight trading range. On the downside, 86,000 to 88,000 is a critical support zone aligning with Fibonacci retracement levels and short-term holder cost bases. If prices dip here, it's a golden opportunity for savvy buyers. On the upside, breaking the $104,000 resistance could send Bitcoin soaring to new heights. Volatility remains a wildcard. Bitcoin's current score on the volatility adjusted power law index is 60 over 100, right at neutral. This means sharp moves either up or down are possible. Looking longer term, history gives us clues. In previous cycles, Bitcoin peaked 233 to 328 days after hitting an all-time high. If 2025 follows this pattern, we might see the next big peak between June and October. The historical peak timelines graph gives us a fascinating glimpse into how past patterns could guide Bitcoin's future. And that's a wrap for this week's Bitcoin price analysis. While short-term volatility might keep us on edge, Bitcoin's long-term story of scarcity and demand remains as strong as ever. Watch key levels like 86,000 for support and 104,000 for resistance. If you enjoyed today's insights, smash that like button, share this video, and subscribe to Edge 21 for your weekly dose of Bitcoin insights. Bitcoin is changing the game, and we're here to give you the edge you need to stay ahead of the curve. Don't forget to check out edge21.co, where you'll find personalized content including trending tweets, Nostr notes, videos, articles, and price analysis about Bitcoin. Thanks for watching, stay strong, and hodl on.